What's up everybody? Welcome to the Stocks channel. My name is Corey and today we're going to do macro level analysis of all of the indices and we'll also look at the VIX and Bitcoin. First up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so looking at the SPX, we can see that we did have a bullish week this week and we did see buyers of the dip off that 5 EMA. Remember, this is a weekly chart, so every candlestick represents one entire week's worth of price action. Now, the important thing to notice in the SPX is how bullish this trend is. Remember, we got the bullish trend back here in June of 2020, and we never lost it ever since, and we're looking at a weekly chart here. So from a macro level view, looking at weekly charts of the SPX, we've been in a bull trend for over 12 months now. This is a very bullish indication that the SPX is going to continue to go higher until we lose the bullish trend. Remember, I always say the trend is your friend and trade in the direction of the trend. That doesn't mean you won't get volatility. As you can see, there's plenty of times that we had 3 to 4 weeks of volatility before the trend resumed. However, the point I'm trying to make is, as long as the trend is bullish, the price action is going to be biased towards the upside. So right now, we do have new upside price targets since we broke above 4,300, and our next price target will be 4,488. From this week's close to our next price target is about 2.7% higher, and above that, we do have a price target right around 4605. At this point, it does look like the SPX wants to reach that 4600 level. There's a lot of reasons why that level is so critical, and as long as we have the bullish trend, it's very likely we're headed towards that direction. You can see this trend is very healthy, and there's no signs that the trend is going parabolic, and when we don't get parabolic price action, you get a really healthy, sustainable bull rally, and we are definitely in a very strong bull rally going into the summer. So it's very likely we'll see the SPX in the 4400s very soon, and then we possibly could see a pullback from that level before we break out to 4600. So 4600 is more of a longer term price target with 4488 in the near term as our price target. We can see there's plenty of room in the upper Bollinger Bands for the price to continue to climb higher, and these Bollinger Bands will continue to expand each and every week. The trend is very healthy and very strong, and all of these moving averages have very nice bullish separation. Jumping over to a monthly chart of the SPX, we can also see the price action still well above the 5 EMA, and we still have the very strong bull trend. The upper Bollinger Band still has plenty of room to the upside for the month of July, which does mean the price action can continue to climb higher. We see our price target at 4488 is within the Bollinger Bands, so it is possible we could get to that price target this month. That would go hand in hand with the summer bull rally that I've been talking about. Now, from where we are now back down to our trend line, we still do have that potential of a 13 to 16.5% drop. But remember, as long as the trend is bullish, it's very unlikely we're going down to test those support levels. So it's more than likely in the next stock market correction, it could be a significant pullback to eventually test that breakout level. Because remember, that was a resistance trend line and you typically do back test resistance breakouts as support. The question is not if, it's just a matter of when. And it's not going to happen as long as we're in a bull market with a very strong bull trend. So do know if we do lose the bull trend on this weekly chart, it is possible we see the SPX coming all the way back down to about 3,700. Now, I always say don't try to call a top in a bull market, and as long as the price action is bullish with a bullish trend, you should not be paying attention to SPX levels of 3,700. It's just not rational to be looking at price targets that far down when we're in a bull market, because in a bull market, we expect the price action to continue to grind higher and go to brand new all-time highs. So while this will be our support level and our price target when we see the market roll over, we have not yet seen that rollover and we need to remain bullish. Jumping over to the bear bull survey, we can see that we're at 40.2% bulls, 35% of the people are neutral, and 24.5% of the people are bears. Overall, this is a contrarian indication, and you normally want to go against the majority. But right now, we still have plenty of people in the neutral camp, and even though we do have the majority bulls, it is completely normal to see the majority being bulls in a bull market. The biggest concern will be if the bullish number starts getting over 50%, but right now I don't see any concerns in this survey going either direction, and if anything, it tells us there's still plenty of cash on the sidelines that can and probably will eventually buy into this market. The higher we go, there's more than likely going to be people getting nervous and going to cash, and eventually when they see the bull rally is the real deal, they will buy back into the market. Jumping over to the NDX weekly chart, we can see the NDX is back on the bull, and we have seen the NDX starting to break out and starting to run. As you know from my daily analysis, the NASDAQ 100 is in a very strong bull trend, and on the weekly chart, you can also see that bull trend as well. The moving averages are creating nice separation, and they're all stacked to the bull side. And remember, we're breaking out of this multi-month consolidation. We see the NDX breaking out and starting to run, and our price targets are above at 14,832, which we're basically at, and then our next price target above will be 15,272. So from this week's close up to that next price target is about a 3% move to the upside. Remember, once we get to these price targets, it's always possible we could see a pullback before we break out and go to the next level. There's no reason to think we won't continue to climb higher because we have the really strong bull trend with the really strong price action. We're at the top of the upper Bollinger Band, but again, this is a weekly chart and these Bollinger Bands will expand. Jumping over to the monthly chart, you can see the Bollinger Bands are well within our price target range, and the Bollinger Bands take us all the way up to about 15,687. So there's still plenty of upside potential for the month of July as we continue into this summer bull rally. We could see the NDX on the monthly chart has a very strong bull trend and the price action is still breaking out well above the 5 EMA and forming new all-time highs. So the price action and the trend on the NDX are still looking really great from a macro level perspective, and remember, we've never lost this bull trend. So jumping back over to the weekly chart, you can see the NDX has had the bullish trend going all the way back to May of 2020. We almost lost the bullish trend in March of 2021, but we never actually saw the 5 EMA cross below the 13. So the bullish trend is still very strong and very well intact as we continue to march higher in the NASDAQ 100. Jumping over to the Dow Jones weekly chart, we can also see a lot of buyers of the dip in the Dow Jones. We see the price action came all the way back down to the 13 EMA and we saw buyers stepping in, driving the price action back over a positive sloping 5 EMA, and that's where we closed out the week. So the Dow Jones still has the bullish trend and the price action is still over the 5 EMA for the third week in a row. Remember, 4 weeks ago, we came all the way back down to the 20 simple moving average, which is a strong support level in any bull market, and we saw a huge bounce off of that level, and now we're starting to break out, and on a weekly chart, we did close at a brand new all-time high. So the Dow Jones is looking very bullish, which is great news because we have all of the indices looking bullish. We have the S&P 500, the NASDAQ 100, and the Dow Jones breaking out to all-time highs and all in bull trends. We have plenty of room in the upper Bollinger Band so the Dow Jones can continue to run without any resistance from those Bollinger Bands. On the monthly chart, you can still see great price action and a very strong bull trend, so there's no concerns on the weekly or monthly charts for the Dow Jones. Jumping over to the Russell 2000 weekly chart, we can see that we're barely holding on to the bull trend. All of the moving averages are stacked to the bull side, but they really don't have any positive sloping direction to them. The Russell 2000 has been going sideways for a long time now, going all the way back to February of 2021. We really haven't seen the Russell 2000 going much of anywhere. Now, normally when you get a large consolidation like this, you are going to see a large breakout in either direction. So right now, with the bull trend, it does favor the Russell 2000 breaking out to the upside, but there's always the chance that we break down and start heading lower. The major support for the Russell will be right around 2100 because that was our resistance level breakout, which now should try to act as support. You can see the Bollinger Bands are getting very tight, which does mean we're getting a squeeze, and that will fire in either direction in the very near future. On the monthly chart, you can see the Russell 2000 did get way too far, way too fast, and that's a large reason why it continues to consolidate before moving any higher. You can see the 20 simple moving average is still trying to catch up to the price action, and that 5 EMA is starting to flatten out from that parabolic look. But overall, there's still plenty of room in the upper Bollinger Band, and we still do have the bull trend and the bullish price action on the monthly chart for the Russell. On the VIX, you can see that we closed the week out below the 5 EMA, and we're getting very close to that support level in the 14s. Remember, the VIX was all the way down around 12 going back to the bull rally in 2019 before the March 2020 crash. So the VIX has been bleeding out ever since, and we've seen these little spikes of volatility on the way heading lower. Remember, a low VIX is low fear, which favors a bull market and brand new all-time highs. And you can definitely see the weekly trend on this chart is bearish, which means the VIX has been trending lower. So overall, this is a bullish indication that the stock market is very likely going to continue to go higher as long as we continue to see this trend in the VIX. So look for the VIX to continue to head lower back towards 14 and eventually break down below 14 and start heading back to 12. That will be extremely low volatility, and that will tell us that the stock market could be getting ready for another large volatile spike, which could be our next stock market correction. So right now we see no concerns in the VIX, and you can clearly see the trend is down. Jumping over to Bitcoin, you can see we're still hanging around that 50 EMA on the weekly chart. This is a very critical support level just above 30,000 because that's where Bitcoin has not been able to break below critical support. Anytime something can't break below a critical support level, that's usually a bullish indication that buyers are stepping in and not allowing the price to head any lower. So once all of the Bitcoin sellers and day traders get out of the way, we could see Bitcoin going back into a bull market. Right now it's consolidating and building up a strong foundation of support around 30,000 to 33,000, and we do see a lot of buyers stepping in at these levels, which is a great indication for the bulls. We still need to see the price action breaking above 39,000 to regain the bullish trend, and we need to stay above the support level at the 50 EMA, which is sitting right around 33,850. As you can tell from this chart, if we break below 30K, we could be coming back down to 27,000 or all the way back down to about $20,000. So this is a very critical support level. On the monthly chart, you could see why Bitcoin is struggling so much, because it did get that parabolic blow off top, and we did see the massive wave of selling after the massive wave of buying. We can see it is starting to flatten out and these candles are getting a lot smaller, which does tell us that the selling pressure is decreasing and we're starting to see Bitcoin trying to make a reversal. So watch Bitcoin's price action, because as you can tell on this monthly chart, we still have the bullish trend and we're currently holding up above the 13 EMA on the monthly chart. So that's overall a great indication that we still have that bull trend even after that blow off top look. Remember, this is all possible to be changed if we do see that critical support breaking down, but right now we just don't see the price action breaking below support. So jumping back over to the S&P 500 SPX index, you can definitely see the bullish trend does look like the SPX wants to get up into that $4,600 range. Overall, this has been a very strong bull market that's not going to die easily, and we do see bullish trends across the board. We see the VIX heading lower, which is very good news for the bulls, and we see bullish trends and bullish price action in all of the indices. So overall, I'm expecting the summer bull rally to continue to roar on, even though we could see a little bit of volatility and a little bit of pullbacks along the way. Remember, this is macro level analysis, and we still have to play the stock market day by day. On my daily analysis, which I do Monday through Friday, you can definitely see that we still have bullish trends, and on the weekly charts, you can still see a lot of strength as well. So this is still a very strong bull market, so stay objective and follow the price action and follow the trend. Don't get bearish just because we continue to go higher and you're hearing people say that the stock market can't go any higher. It's just simply not true, and people say that every single year. There's always going to be skeptics in every bull market, which is a great thing. Bull markets need plenty of skepticism, because if everybody is bullish, it's a very good indication that we're already at the top. So we don't see everybody bullish just yet, which does tell us it's very likely we can and probably will continue to go higher from here. So watch the price action and watch the trend, and remember to stay objective and block out the noise. Remember that I have my trade alert service called BANC Trade Alerts, which only trades TQQQs, and you get all of your buy and sell alerts via email and text message. You simply just have to execute the trades yourself, and I am running a 50% off promo code for your first month, so now is the best time to try BANC Trade Alerts. You can find out all of the details on how to join in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate the market and always stay on the right side of the trade. You can find out how to join the Discord community by clicking on the links below. So thanks for watching, everybody. I hope you're enjoying your weekends. And as always, I will see you in the next episode.